is everybody's now started using volcanoes. Bitcoin is a volcano, because when it came to, well, you should mine this for your reserves, now it gets interesting. Should an economy like El Salvador have Bitcoin in their reserves? Without question, they should. But how do they get it? Without spending other money from their reserves, and they probably don't have enough reserves. And the nice part is they figured out they can mine it because they got volcanoes, and those volcanoes have massive geothermal springs. So basically, free green electricity. And so now El Salvador, and pretty much anybody else with a volcano, with that kind of nice setup, can mine Bitcoin at a country level, generate a asset that they can put on their reserve balance sheet that will grow over time and protect them from the general devaluation of the US dollar in fiat money terms, the debasement effect. So at that level, brilliant. At remittance level, brilliant. Everything else, unproven.
You know, the interesting bit in what you were saying is it goes back to the global macro economy and also political side of things, because there is a sort of, I would call it an anti-dollar view to this, i.e., here's a country that was dollarized. It can de-dollarize, if you will, by going to Bitcoin. And, you know, this is a test case in that sense. Do you think that, you know, this is part of a nexus to prevent the dollar from continuing its hegemony?
If you dollarized to a 70, if you de-dollarized and adopted a 70-volt asset, you're going to utterly destroy your economy, because nobody has the ability to forecast or hedge currency in that kind of market, and it's very expensive to do so. So we need to understand moneyness, really, in this equation. What works as money, what works as store of value, what works as a reserve asset, and don't confuse the whole lot, because you are utterly going to destroy every industry in El Salvador if you can completely convert to a 70-volt currency. And the moment the currency goes to the roof, their costs change, collapse their costs change, imports go up, imports go down by such huge swings. I mean, that would literally hold out everybody. So
right, yeah, that makes a lot of sense. So talk to me a little bit about Ether and Bitcoin, because I know that you are legging into Ethereum from Bitcoin, but you know, ever since this El Salvador announcement, there's been a relative change. When I look at the assets, you know, I look at all of the assets, you know, on a week basis, many of them are down. Bitcoin has seen a bid. Do you think that's just a spike on the news and then that's going to fade, or is there something going on there?
No, I think, you know, people allocated more to Ethereum because it had been going up. Both spaces were missing a positive news story. Bitcoin gets the news story. People reallocate money from Ethereum into Bitcoin. Pretty normal stuff. And the ETH Bitcoin cross went quite far. It's got a significant resistance at about 0.08. I think once it breaks that, it goes much, much higher. But I think a correction where Bitcoin outperforms for a few months, 2 months, 3 months, I think would be healthy and normal. I think then we start coming in to the new ETH 1559 token and the changes that's probably pretty good story for ETH. So I think ETH tends to outperform. We had Kirill Sokolov interviewed Joey Krug on the platform. Great interview as ever. What's amazing is Kirill's been around a long time. He's not a spring chicken, but he's been all, you know, and many people consider him, you know, from traditional financial markets. He's been all over this crypto thing for a long time. You know, him and I are good friends, and I've always been amazed about his thought leadership in this space. So he interviews Joey Krug as the opposite end of the age group and as an equal outperforming success. And Joey was actually talking, his view as well is probably that Ethereum outperforms as we start moving into this early next year into the proof of stake mechanism. You know, it'll probably be a buy the rumor, sell the fact. You know, you get there and then it's all in the price. But so I think it's Bitcoin first, then ETH. And when ETH goes, all of the tokens go up as well. So we're going to see some crazy times ahead. I'm still remain extremely positive.
Right. Now, I'm looking at the time because you told me you have a hard stop at 5 o'clock, and you told me that I took you a full hour the last time that we spoke. It
Ed,
was
speaking
only
to you, I
55
could
minutes.
speak hours. So
So I'm going to go through lots of questions now.
okay, let's do it.
Have you answer some of these
Quick
questions because I think
round.
there's some good questions here. There's one on the Indian stock market. I don't know how much you follow it, but Alex M was asking, I've been waiting patiently for a pullback in Indian stocks. He says, when would be the right time to buy INDA, that's an ETF? And thanks for the recommendation regarding KRBN. Keep up the good work. It is greatly appreciated.
I have struggled to buy India for exactly this reason. It never gets cheap, it never corrects enough, and never stays down. So I don't know. I'm still focused on crypto, so I've not put anything on in India. I think the only way to do it is average in. I mean, I just don't know how to do it because I've struggled with this over the last 10 years, and I've been invested in India on and off. I mean, it just goes up. And every time it corrects really sharp. You think, oh, great, it'll stay down for a while. It doesn't, just goes back up again. So I guess that's what happens when you are financializing 1.3 billion people and they're putting money into their pension plans. Stock market doesn't stay down for very long. So the answer is I don't know how to do it. So in that case, I just tend to average in when I'm terrified that I'm going to look like the idiot buying the top. I just average in over, let's say, over 3 months. Just do a bit every week, see where you get to.
Now back to the real economy in the U.S., this whole, mortgage, or rather a treasury down. I'm relating to what Thomas says to that. He's asking this. He says, hello, Raoul. With the eviction hello. With the eviction foreclosure ban set to end in less than 3 weeks, what is your take on the housing market? If the 30-year continues to catch a bid, could that even put more fuel to this red-hot market?
So, look, I think all this forbearance stuff and all of this, these are some of the mechanisms why growth is going to slow down. I think the market is not going to slow down in housing because, as I've explained before, if you divide the housing market or house prices by the Fed balance sheet, which is a measure of debasement of currency. It's not about the mechanism of how money moves around. It's just about how do you think about debasement. It actually just means the house price has gone sideways. So what you're seeing is the excess money printing is lowering the purchasing power of the dollar versus hard assets. That's what you're seeing. It's now being exacerbated by BlackRock and the other Blackstone and everybody else buying massive amounts of property, because as property goes up in value and wages haven't gone up, part of the problem I've been talking about for a long time, wages haven't gone up enough, it means you're going to turn the US into a renter's economy. So, you lived in Germany, it's pretty normal in Germany, it's pretty normal in France.
Right.
Different countries have different ways of doing things, as long as you channel some money into some savings that you have an asset at the end. So the Germans have a higher savings rate, but they don't own their houses. So they're just different ways of approaching the same end goal. But America looks like it's going to become a nation of renters if this continues, because the issue with wages, driven by debt, demographics, globalization, and technology, is creating all of these, it's creating a pressure on wages overall. So the housing market's not going to slow down. There's nothing going to slow it down. People are still looking backwards to 2008, which was a very different levered market. This is not a levered market so much anymore, but an institutional market. And it's not good, but it is what it is.
Very interesting. Now, I have a bone to pick with you a little bit about this debasement thing, because I'm looking at it slightly differently. And by the way, this is somewhat informed by a conversation I had with Warren Moser, which is going to be on the platform.
How did that go?
That was great. I thought it was very thought provoking, to be honest. I mean, he comes at it from such a different perspective that really, in real time, to get your head around certain things, you just need to be focused on. Okay, what did you just say? Let me see if I can digest that before I ask you the next question. The one thing that I thought was interesting, and he didn't say this in the interview, but it was before. It was about he talks about the right hand pocket and the left hand pocket in terms of M2 as an example. What he's basically saying is that, look, all fiat currency money is fungible as far as the government's concerned. And when M2 is rising at a ridiculous rate because the Fed is printing money, adding to its balance sheet, really all it's doing is it's swapping one asset for another.
Yes.
And so ultimately, the real economy impact from his perspective is one that is deflationary, because they're sucking interest income out of the real economy. They're taking interest income out of the private sector and keeping it at the Fed when it could be in the other economy.
So this is a good question. Is QE deflationary or inflationary? I also happen to believe it's probably at the margin deflationary. Because as you drive down interest rates as well, it means that anybody who lives off interest has less interest. So you have less recycling of interest, and you can see that in a number of different ways. But the issue I have generally with the MMT construct is that I think I've always said there's an escape valve, and the escape valve for me was the value of the currency.
I agree.
And this is what it's showing. And it wasn't, we all got it wrong. I certainly got it wrong. We thought dollar, i.e. the DXY dollar index or dollar against the euro, dollar down would be that. But then when you get to a world of how can you have any currency going down, because they're all debasing their currencies. And then you understand that's why asset prices are rising, because the value of the currency is going down. So the MMT argument, which is it's net neutral for the economy, maybe it's slightly disinflationary, absolutely fine. But what it is doing is lowering the purchasing power of the fiat currencies against restricted supply assets, which is why art goes up, antique cars go up, gold goes up, diamonds go up, Bitcoin goes up, and stuff like that. So it's that. And equities go up and real estate goes up.